Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Welcome back to the podcast. Thank you so much for coming back. I appreciate it. Okay, today we are going to talk about loan payments and premium payments and how they are two different things. We get a lot of questions on this, so I'm sure that I've talked about it before, but I think it's time to revisit it. First of all, if you have read Farming Without the Bank once, why haven't you read it twice, 3 times, 4 times, 5 times? If you have read Nelson Nash's book, why haven't you read it more than once? And the question of the day, are you studying the concept? I'll let you in on a little secret, my friends. I read Nelson's book over and over and over and over and over, and I was like, yep, I got it. I get it. But guess what? We've recently been studying Nelson's book. Oh my, that's a whole different experience. Studying it means we're really paying attention to every word he said. Not only do I hear him more clearly in my head, talking, because exactly how Nelson wrote that book is how he always spoke to us. So not only am I hearing him talking to me, but it is very clear, the message. Very clear, the message. It is no different me studying Nelson's book than people listening to my book more than once, twice, 3 times. I have it on audio. I have both of them on audio. Farming Without the Bank and Life Without the Bank. Both of them are on audio. Every single time you hear it, you are going to hear something different. Every single time you read it, it's going to be something different that catches your eye because you're going to be in a different position. So if you have questions, what is the difference between premium and loan payment? You will most likely find your answer in my book or in Nelson's book. But let's talk about it today. Premium payment is the money that you pay to have the death benefit. It is also the money that you pay that increases cash value. There are 2 parts to your premium. There is your base premium. That is the technical word for the amount that buys whole life insurance. So let's just say that you have a $10,000 premium. $2,500 may go to base premium. That's buying whole life death benefit. $7,500 may go to the paid up additions rider. That is the portion that is going to create the cash value growth. And I've covered this before. This is what creates wealth in the policy is when we pay the premium. Once you've paid money into the paid up additions rider and you've created cash value, once you've put money there, you now have accessibility to borrow against it. When we borrow against it, it must be paid back. When you pay a loan back, if you take a loan, and let's just keep it even, if you take a loan of $7,500, you can only pay back $7,500 plus the interest that the insurance company charges you. They keep that. So if you borrowed $7,500 of principal, you can only pay back $7,500 of principal. Those are 2 different payments. A loan payment goes back to the loan. It releases the cash value from collateral. So when you took a loan, they used your cash value as collateral and they sent you their money. Now, when you pay it back, you just release your cash value from collateral. It does not increase cash value. If you borrow $7,500 and you pay back $7,500, you have access to $7,500. You don't have access to $15,000. It does not double. We do not make money taking loans. When you pay premium, cash value increases. That is where the growth of paying extra back from the loan comes from. So if you took a $7,500 loan and you paid back $8,000, $7,500 went as a loan repayment. $500 is going to go in as a premium payment. $500 increased cash value because we paid it as premium, not as a loan repayment. This is confusing if we think that it's all one thing. And when we pay back extra, which is what I talk about in my book, Pay Yourself Back Plus Interest. Nelson talks about it in his book, Pay Yourself Back Plus Interest, Be an Honest Banker. If the life insurance company charges you 4.5% and you pay it back at 6%, the extra interest is going to go in as a premium payment. And it will most likely go to the paid up additions rider, which is going to go to cash value. If this piece is confusing, please, please, please make sure that you ask so we can clarify this. I will draw this out on my screen. If you guys have read the book and you set up an 1.5-hour consultation, I will draw this out on the screen. If you are a client and still confused by this, please schedule an appointment so we can visit again. That's why I'm your agent, is so that we can continue to visit and I can continue to teach. If this is confusing, please, please, please schedule an appointment. And please make sure that you are going back and rereading the books. This is another misconception, is that we make money taking loans. No, we only make money paying back more than what the insurance company is charging. And the only reason we're making money is because we're putting extra premium into the policy. But what if the premium doesn't fit in the policy, Mary Jo? What if it becomes a modified endowment contract? Well, then we don't put it in. Maybe you put it in a savings account off to the side, and then when we have enough, then you start another policy. Being an honest banker, ideally we want to get as much into the policy as we can. But being an honest banker is putting your banker hat on and saying, the insurance company is charging me 4.5, but I was paying 10 to the credit card company. So I'm going to pay 10 back to myself. The extra interest is going to go to savings. And if I have to use it out of savings, I'm still going to treat it as if I'm the bank. And I'm still going to borrow it and pay it back plus interest. Nelson said we can utilize the concept for anything, even a shoebox. Because utilizing the concept is the thought process of you being the banker. You saying my money has a value. That's the concept. The tool is the policy. That's allowing us the uninterrupted compound interest, allowing us the safety, the guarantees, the liquidity. The policy is allowing us one extra little piece, but the concept is saying, I'm going to think about money correctly and differently so that I can create wealth and do something different than anybody else. This is a shorter podcast. You guys are probably like, thank God, I'm sick of listening to her for 20 minutes, beating dead horses every week. Well, thank you for tuning in every week. I appreciate that. I like the fact that you keep coming back. But I think that clears it up. I mean, it's clear in my head. I hope it's clear in your head. If it is not, then I need to draw it out. And I am a very visual learner. So I get it. If you want it drawn out, let me know. And I'm happy to draw it out. I'm happy to explain it. Schedule your appointment. If you're a client, make sure that you are letting us know that you need to get in and you need to visit with me. I have a link to my calendar for meetings for you guys. just email us. All of you can email us at maryjo@withoutthebank.com. And I will make sure that we get back to you and we get something scheduled. If you have read any of the books, Farming Without the Bank, Life Without the Bank, or Becoming Your Own Banker by R. Nelson Nash, and you have not scheduled your appointment yet, please do so. I am only booked out about 4 weeks, I think, right now. So get on the schedule. If you need to reschedule, you can always do that, but get on the schedule now so you have a time slot. And then we can go over, what are you doing in your operation? Where can I help? What can we look at? What can I explain to make it more clear? Right? And not clear as mud, more clear. Because I'm not okay with clear as mud. I will start over in my meetings and start re-explaining stuff if we're not getting it. If you're not nodding, if I can't see a facial expression and it's just a blank, I know that we did not get it. I know that it's not clear. I will take the time to help you understand it. Because you can't be the banker if you don't understand why and how. The books are going to help with that. So if you've not gotten the books, go to farmingwithoutthebank.com, grab your book. You can go to the shop page. I suggest you get at least one of mine and Nelson's together in a bundle, because that is going to be the best option for you. If you really hate reading, then you can just get whichever book you choose. But I'm telling you, they're both in audio. So, you don't even have to read it. You can just listen to me. They're only like 2-hour recordings because the books are so short. So short. Let me know if you need me, maryjo@withoutthebank.com. If you feel so inclined to share this and to leave a review, I would appreciate it. Okay, you guys, you have a fantastic day and we will see you in the next podcast.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.